Yes, ma'am.
Okay. Good morning and welcome all the participants for the program of real estate. It's a tax and legal issues in real estate. And we have with us very renowned faculty and you can say our former chairman of MahaRERA, Shri Gautam Chatterjee with us also to give us, to enlighten us on the topic. Uh, we have welcome sir of chairman sir of WIRC, very energetic chairman, and he pushed me कि नहीं एक तो program लेना ही है वर्कआउट के पहले. So but before that please I will request all to put your hand to your heart for our institute motto.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you, Mr. Ji. Now we want to invite CA Murtuja sir, our WRC chairman, to say some few words for us, sir. Please give your opening remarks, sir.
Thank you, Pinky Madam. Good morning to everyone. I welcome all the panelists, all the coordinators, and all the participants as well to this lovely program on this Saturday morning today. So let me first recognize presence of Shri Gautam Chatterjee. Sir, welcome. Thank you very much for joining and accepting our invitation, sir. And today morning also, sir, I was reading the newspaper and I saw some 45 builders in Kalyan Dombiri area. They've been like their accounts have been freezed or something by RERA because of whatever malpractices. And so really hats off and kudos to the MahaRERA for really good work which is being done. So thank you for all the good work, sir. Let me also welcome CA Vimal Punmiya ji, CA Naresh Sheth, CA Sunil Naik. Am I audible?
Yes, sir.
Yes, sir. Yes, sir. Yes, sir.
CA Advocate Vinay Shraff ji. Let me also recognize presence and thank CA Sachin Tulsian, CA Amit Agarwal, and CA Rashmi Lodikar. And I'm sorry if I'm missing anyone else. So really like the topics which we covered, the direct tax, indirect tax, and RERA in the panel discussion as well. And there are so many issues which are there in the construction real estate. And I'm sure that the practicing chartered accountants and the members face on a daily basis, and hence such a huge overwhelming response. More than 250 participants have registered. So really good, and people I think which really done a lot of issues. So on direct tax, indirect tax, RERA, there are so many direct tax, indirect tax also, I think from development right to how do you give to the tenant, what price, whether you collect GST or not, and when you give to tenant at a much lesser cost. And there are so many aspects of it, and I'm sure it is going to be a treat to listen to all of you, and lots of doubts will be cleared of the participants with such huge and experienced panel. I request the participants also to keep typing in their questions into the chat box, and I'm sure Pinky Madam and other coordinators will take all those questions up with all our learned panelists, and I'm sure they will be able to answer all of them. So with that, again, thank you very much. Happy learning to all the participants, and a big thank you to each and every one here on the panel for sparing your valuable time. So with that, over to you again, Pinky Madam. Thank you very much. And really good work being done, Pinky, in the Members Industry Committee. Thank you. Continue the good work.
Thank you, sir, to motivating us regularly to keep good works. And we don't want to waste more time of our learned faculty and our participants. So we see Gautam Chatterjee is also there. So I want to request CA Vivek Agrawal to introduce our webinar speaker, keynote speaker. Please, Vivek ji. Sure. You are on mute, Vivek. You are on mute.
Good morning, everyone. Thank you for giving this opportunity to introduce Mr. Gautam Chatterjee. Mr. Gautam Chatterjee, a retired IAS in his illustrious career, spanning around 40 years, has held several important assignments in the government of Maharashtra and government of India. His long association with the urban and housing sector included assignments of Additional Municipal Commissioner of Mumbai Municipal Corporation, CEO of Maharashtra Housing Society and Area Development Authority, CEO of Slum Rehabilitation Authority and Dharavi Redevelopment Project, Principal Secretary of Maharashtra Housing Department and Founder Chairperson of the Maharashtra Real Estate Regulatory Authority, MahaRERA. MahaRERA is regarded as a role model for effective implementation of RERA, with many innovative initiatives introduced by MahaRERA through an ISO certified, paperless and zero footfall automated office. The successful MahaRERA Conciliation Forum is one of such initiatives implemented by Mr. Chatterjee. Mr. Chatterjee is presently mentor Bihar RERA. He is also honorary member of Advisory Council of SAMET, a conciliation and mediation forum of Mumbai Grak Panchayat. Yes, for that, I want to now invite Mr. Gautam Chatterjee. Thank you very much.
Thank you so much, Vivek.
Welcome, Gautam ji. Before that, I want to make one announcement. Sir Niranjan Hiranandani is trying to join the program, but because of the poor connectivity, he is out of India, and because of poor connectivity, he is not able to join the program. So if he will success in joining the program, he will join in between. Otherwise, Gautam Chatterjee will carry on. Thank you, sir. You can.
Thank you, Pinky ji, Chairman WIRC, Murtuza ji, all the coordinators of WIRC, and the Chief Organizer, Pinky Kedia ji, all the esteemed panelists for today's panel discussion that will follow, and all the respected participants for this online discussion forum of tax and legal issues of real estate sector. Mr. Hiranandani was also there to speak on this subject. So I had thought that he would cover the issue of taxes, indirect, direct, and all the other issues. And therefore, I had thought that I will share some of my thoughts on the legal issues of RERA. So that's what I'm going to do, hoping that either Mr. Hiranandani, when he joins, he covers those other issues of taxes, or in the panel discussion, they will be coming up. As we speak here today, we find that we have just finished 5 years of completion of this act, the Real Estate Regulation and Development Act, which is commonly and popularly known as RERA, which came, some of the sections came into effect in 2016 itself, but then the act's implementation started from May 2017. So as we speak here today, we have completed full 5 years and little over 5 years. And I think 5 years is quite an amount of time to sit back and see the hits and misses of the implementation of such a beautiful act, RERA. We are all aware that the sector that we are talking about is such an important sector from the point of view of the country's economy, its contribution to GDP, its contribution to generate a whole lot of employment, its support to so many other industries. And I think even from the perspective of households, majority of the households feel that this asset of real estate is the most important asset. Maybe even they put it above gold. Obviously, much important than many other assets in which people would like to invest their money in. And it's no wonder that maybe 4 out of 5 people, 77% of the total assets of the household assets are in the real estate sector. So that's the importance of this sector from all these perspectives. And therefore, it is a pity that this sector remained unorganized and unregulated for such a long time. And it was very appropriate that this act in 2017 was brought in to regulating the sector, bringing professionalism in this very important unorganized sector. Let's for a moment also recall some of the issues that were there. Just now, Chairman Murtaza ji pointed out as to what has happened in the outskirts of the Mumbai MMR region in Kalyan Dombivli, where certain developers tried to get a RERA, MahaRERA registration on the basis of a non-approved project. So they faked various documents showing that they have projects approved by the planning authority, the municipal authority, and obtained RERA certificate. And ultimately they got caught. Now that's the best part of it, that some malpractice, some abuse of the various provisions of law, which used to happen rampantly in the pre-RERA days. Today, if someone tries to do that also, there is an act in place and an authority to implement the act, we should be immediately there to catch hold of that problem that is brewing. Now, the major problems that were there in the past, which this act tried to plug, basically the first was information asymmetry, where in this sector, and this sector, let us remember, is so different from all other sectors in the sense that here the money is taken from the buyers much in advance. And it is the money from the buyers which helps in completion of the product. No other sector would be where you put in the money without knowing as to how this will take shape and how the product will be when finally it will get delivered to me. This was the only sector where this was happening. And therefore, with the money taken in advance from the buyers to be used to deliver and complete the project and to complete the product was something where fiscal indiscipline was rampant. And the fiscal indiscipline was in the sense that this money, which was supposed to go into completing that product, very often used to be diverted to other areas, other projects. And people felt that this is the money which I have, which I can use for even expanding my business. And therefore, this actually the basis on which this malpractice and other things were happening was this fiscal indiscipline, which was to be curbed through this act, which was brought in the form by which the act said that the implementation of the act would be most dependent on professionals. And in the set of professionals, the three professionals that are listed in this Real Estate and Regulation Act, among architects, engineers, and chartered accountants, I found the role of the chartered accountant was supposed to be the prime, because the basic problem of pre-RERA was fiscal indiscipline. And this fiscal indiscipline was to be curbed by ensuring that the money is collected from the prospective buyers through bookings and through registered agreements for sale are monies which go into the project for which the money is getting collected. And therefore, I felt that while we were talking about making the sector professional, the government and the parliament, the parliamentarians felt that this professionalism in the sector would be through professionals. So there'll be no micromanagement by an authority which will try to oversee every aspect of how the project is getting implemented. The authorities would ensure through professionals like chartered accountants, engineers, and architects as to how the progress of the project takes place. So that's the huge role that this act has actually put on chartered accountants. And I'm so happy that today all of us are sitting together to see as to where do we stand, as to whether there are more hits or there are more misses when it comes to 5 years of implementation of RERA. Of course, the other two professionals talked about, like the architect and the engineers, also have a role. And I have personally felt that the role that the engineers could have played is still not actually explored in what has been laid down in the provisions of the Act. But then MahaRERA tried to do that by saying that the quality of the construction work also is something that's very prime for a buyer. A buyer who puts in his life savings into buying a home is also interested in seeing that the quality of the house that he gets is something where he can aankh moond ke vishwas kar sakte hain. If that is not the case, then who is it who is giving him the guarantee that no, please get into the house and for the next 20, 30, 40, 50 years, there should not be any problem, any major problem. Small problem certainly happens, but then major problem of structural defects and other things. And therefore, I felt that the engineers could have been asked to play a more important role to ensure that the quality of the materials used and the way the actual construction has taken place are conforming to the standards which are laid down in the National Building Code and otherwise. Architects were also supposed to play a role, and which they are playing, to ensure that whatever has been approved by the planning authority, in accordance to that approval only the work is taking shape. So basically, this complete act takes care of seeing that the work happens in accordance with the building bylaws. The architect looks at that. The engineer ensures that the quality of the construction takes place properly. And most importantly, the fiscal discipline in the monies collected being utilized for the proper purpose was supposed to be how this act should have been implemented. Now, as we speak here today, the unfortunate thing is that if you look across the country as to has there been a uniform rollout of this act, unfortunately, no. We still have certain states, union territories, which are still struggling to actually put this act in place or implement them. There are few states who have yet to set up the Real Estate Regulatory Authority, few states who have yet to set up the Real Estate Appellate Tribunal, few RERAs which are yet to operationalize the website, because the whole idea was that there would be a website on which all the information will be displayed and disclosed by the developers. And that's how the information asymmetry was supposed to be removed. The whole idea of RERA was based on the issue, on the principle of disclosure as is there in SEBI. So the disclosure that a promoter or developer makes is supposed to be put out in public domain. Unless it is out in the public domain, it is impossible for others to see. Maybe as a chartered accountant, you being associated with the project will have maybe access to the information, but that doesn't solve the purpose. The whole idea was to empower homebuyers and the citizens at large, and they should be empowered through this information dissemination, which will be available to them through websites. Now, it's unfortunate that we still have certain states, Telangana, West Bengal, and some union territories where the act's rollout has not taken place. And this is blatantly illegal in the sense that if you look at sections 20 and section 3 and 4 of the Act, 20 is laid down that by 1st May 2017, every state should have the Real Estate Regulatory Authority in place. It did not happen. Section 3 lays down that the authority, without making an application to the authority, no new project or ongoing project can go on with marketing, sale, and likewise. And section 4 said that after the act comes into effect on 1st May 2017, within 1 year, that is by May 2018, every state should actually put all these things on a web portal. Now, all these 3 sections seem to be violated when we find this. A lot of states have done it. So kudos to them. And I'm also happy that Maharashtra remained in the forefront when it came to implementing the various provisions of this act. So therefore, I feel that the important role that has to be played by professionals, especially the profession that you all belong to, is of prime importance. And I'm so happy that we sit here together today to discuss on the pros and cons to see how do we further better the implementation of this act. Now, I keep on saying that if I have to put very in short as to what was the basic principle, what was the act trying to achieve, I say that it is the 3 T's. It was trying to achieve transparency, and transparency obviously was through, as I said, this online disclosure, which will tackle information asymmetry, which will tackle fiscal indiscipline, which will tackle opaque practices, and this online disclosure in public domain, which will also empower the citizens to make informed choice. So that was the first T. The second T was of building trust. This sector was trying to take money from people, and the trust deficit was at the highest level. Why? Because there was fear that I might lose my money. I do not know whether I'm still able to trust this developer with whom I have placed all my savings. And therefore, bridging the trust deficit was most important. And that was said to be achieved on two counts. One, of course, through a grievance redressal mechanism, which was put in place. Section 31 of the Act, which talked about you file a complaint, you hear complaints, and then you take a decision, which is quasi-judicial in nature. But most importantly, where MahaRERA actually showed the way, that it's not only that a dispute is taken to a judicial or a judicial quasi-judicial forum, and there it is resolved with two professional advocates, or maybe even I had some chartered accountants who came to plead cases. That's not the only way that you resolve disputes. Disputes can also be resolved through conciliation and mediation. And in a big way, the government with its new mediation bill of 2021 is trying to say as to disputes must be first tried to be resolved by the two warring sides talking to each other to see whether there can be a conciliation and mediation. And I felt that it was a very good initiative that was taken in MahaRERA, has been now taken up by Bihar, by Uttar Pradesh in a big way, and many other states also. I'm so happy about that. So the building of trust can happen when two warring sides can agree to sit, to talk to each other, to see whether it can be resolved or not. So I think that was the second T. And the third T, most importantly, which was also talked about in the order of the Honorable Bombay High Court, in the Nilkamal judgment in para 115, where Bombay High Court observed that the basic principle or the purpose of the Act is to see that a project, real estate project, should be registered with RERA because it has to be completed. So timely completion is the third T. So I think this transparency, trust, and timely completion are the three T's on which this Act is basically principled, and that's how it should actually go out. But as I mentioned, the uniform rollout is something which I had expected, and I hope that in times to come, some of the states which are laggards should come forward and actually do that. Now, let me quickly go on to as to what are the parameters on which we judge the efficacy of the Act. The government of India has on its website put out three parameters on which they judge whether the Act is getting implemented properly or not. The first is how many projects have been registered. The second is how many real estate agents have been registered. And the third is how many complaints have been disposed of. Well, fine. There are certainly three important parameters to judge whether a real estate regulatory authority is functioning properly or not, or what is the quantum of work that is going on in that particular region or state. However, when we say that the basic purpose of the Act was that you register a project, not here for the purpose of registering, that you need to register and you should pay a registration fee. But the purpose of registration was to see that the project should be actually taken to its logical conclusion, which is completion. And therefore, when you are saying that they say today, as we speak, we have, say, about 94,000, about 95,000 projects that have been registered, 70,000 agents that have been registered across the country. But then if I ask this question, should we also not monitor out of these 95,000 projects, how many got completed? Out of these 95,000 projects, in fact, good about 40,000 or maybe less, 20, 25, 30,000 projects would have been the legacy projects, which are the old projects of pre-RERA days. Now, the Act required them also to be registered. Why? They were to be registered because you wanted those projects also to be completed and also monitor their fiscal, whether the monies taken for those projects have been properly used or not, which have been monitored also. Chartered accountants have been doing that. But then the question comes is merely monitoring whether the finances were used properly or not does not stop there. The finances used or not used will have to take it to the logical conclusion of whether the project got completed or not. So I feel that among the various parameters on which judge a project, we should also judge that. Fortunately, MahaRERA, in its website, if you go, you will also see as to how many projects of MahaRERA out of these, whatever number of projects, around 35,000, I think, or 40,000 projects, 38,000 projects that are registered, it shows that 10,000 projects have got completed. At least we have the figure. Now, this 10,000 also would have been a mix of both legacy projects, that is ongoing, the earlier projects of prior to 2016, and the projects which were registered and came into effect after May 2017. Now, if I go back to again statistics, about 13,500 projects were their legacy projects in Maharashtra, of which maybe 7,500, 8,000 have got completed, which leaves us with good 5,500 projects of the past. Past means prior to 2017. Today we are talking 2022. 5 years have elapsed and still they have not got completed. Matter of concern. Certainly a matter of concern. So I think I will flag that as the first issue as to what we should do to see how do we take out stressed projects, stalled projects, and take them to completion. Keeping in mind that the Act's objective was and purpose was that you register a project so that you can complete them. So that's the first point I wanted to make on that. Second is, when we talk about how many projects have been, complaints have been disposed of, it talks about over 1 lakh have been disposed of. If I compare this with just last November, that figure was around 70, 75,000. So in a year, about 40,000 have been disposed of. Good. But then the question again comes, how many are pending? How many complaints got filed? Because ultimately, the crux would be to see whether we are adhering to the 2-month thing that has been made available in the Act, that you once you get a hearing, because it's quasi-judicial speedy grievance redressal. Is it happening speedily? May not be. And it may not be because if the number keeps on rising there, then you will not be able to do that. And over a period of time, it will be something like what happens in judiciary. You have large number of cases pending, and then, in fact, aap number lagate hain. Then you keep on saying, I will hear this complaint today, which has been filed 2 years back. That makes no sense at all, especially in the real estate sector, where a person may have made a complaint that the developer is not signing or making me sign on the dotted lines on an agreement for sale, which is not proper. I feel this is wrong. Or the developer has actually taken more amount and he's not registering. Now, these are things which have to be resolved when the person files the complaint within maybe a reasonable amount of time. If that is not happening, then I have a feeling that there needs to be done. Something needs to be done there. And therefore, I keep on saying that as these number of complaints under Section 31 keep on rising, we will have to also open up the channel of conciliation, and we'll have to see how we can bring down those conflicts which can be easily resolved there. Major conflicts which cannot be resolved through conciliation has to go through the quasi-judicial route. However, majority of the such conflicts, I feel, can get resolved with the help of these self-regulatory organizations like NAREDCO, CREDI, and the other bodies. You are also a self-regulatory organization, WIRC. And therefore, bodies in which these members are affiliated with have a role to play to see how do we bring these issues which act as a stumbling block in the prime objective of the Act not getting accomplished. I think they have a role to play. Coming back to that issue of stress and stalled projects, also I feel that chartered accountants as professionals have a very major role to play. I recall one of the cases where, in fact, it was a case of a developer, DS Kulkarni, who was in jail, and these buyers had come together, and they said that we want to use the provision of Section 8 of the Act, by which we will be able to complete the balance work. That is what is expected also in the provisions of the law. The law, unfortunately, has not taken into account the other major stakeholder who also has the first charge on some of the unsold flats, like the financial institution or the bank. Somehow they have been kept out. I don't know why. They need to have been brought into the ambit of the Act. However, even if suppose they are not there, the Act tries to empower the Home Buyers Association to come together to see that the project can get completed. Now, there I feel that these 3 sets of professionals, the architect, the engineers, and mainly the chartered accountant, have a very major role to play, though they have been the employees of the erstwhile promoter. But if the promoter has defaulted, if the promoter is quitting the scene, and a set of buyers are coming together under provision of law to see that we will complete the project, I think the chartered accountant has a role to play to see how do I hold their hand? How do I empower them? Because the satisfaction that you will get, you might not get the amount due which the promoter was supposed to give you. But however, if still you are able to bring out a stress-stalled project out and complete it, I feel that will be a great satisfaction. I would certainly feel that the WIRC goes into this aspect of various stalled projects, at least in Maharashtra, and see how the members who are associated with the stress and stalled projects takes the initiative to bring together buyers to see how you can take it forward. I'm sure MahaRERA authorities will actually help you and would actually laud you for this very, very noble thing that you would have done. So this is some of the issues that I wanted to bring out, and it's a good thing that there is general awareness has grown. There is more reliance on trustworthy developers. Homebuyers feel that yes, we should only buy RERA approved properties, RERA registered properties. They are also quite happy with seeking their dispute resolution through the RERA forum, either conciliation or quasi-judicial. Though, what as I mentioned, that if the disputes are pending for a long time, that is a little distressing, and I think we need to look into that very closely. Now, the issues, if I talk about as to what do you see as the way forward for the real estate sector, certainly I would feel that the level of awareness that needs to be generated among the consumers is still something where you have to cover large distances, because still I feel people maybe today are knowing the fact that I should buy only a RERA registered project. But it's not merely buying something into a RERA registered project. What is more important is to see whether the project has fulfilled all the other things regarding the due diligence on titles, the agreement with landowners, the encumbrances which are there, the credibility of the developer. Now, all these things are something which are information which is put out in the public domain through these web pages of the registered projects. But I'm afraid we have still not been able to go and educate or made the consumers aware that when they make a decision to buy, they should actually look into all these aspects of the projects. The second thing I would feel, as I keep on mentioning, is that when I'll just finish in 2 minutes, when you are talking about how do you resolve disputes, I think alternate dispute resolution mechanism of conciliation is something we should actually try and invest in, that to see how do we try and bring in dispute resolution through conciliation. Another thing with the developer community keeps on talking about, which is of ease of approvals and accountability of those who approve projects. That's an area which has still not been taken into account in the Act itself. I feel that that should have also been done. So just to sum up, I feel that we will have to make the RERA more effective, and we need to have some strengthening features in the Act. Some amendments may be necessary. First, of course, as I mentioned, Section 8, which talks about when a project which is revoked, stressed, or sold, if that has to be taken to completion, that then I think those other stakeholders who the developers have disclosed are having some sort of an interest in the projects, like banks, financial institutions, investors, landowners, who have created third-party interest in the real estate project, who have maybe first charge, second charge on the mortgage on the project. They need also to be brought into the ambit of the Act when we talk about unfinished balance work to be completed. So Section 8 is something which I feel. Section 11, I think, also should talk about that the engineer should be entrusted with ensuring quality of the input materials and workmanship, because that is something that would give more comfort to the home buyers. I also feel that when we talk about concurrent jurisdiction with the Consumer Protection Act and the other jurisdiction of the laws like IBC and SURFACE Act, we feel that since RERA is the act for the real estate sector, it should get a preference. I think whenever there is an issue related to a real estate project, the first sort of effort to resolve that problem should be given to the Real Estate Regulatory Authority. And if it does not, is not able to do it, if it fails, then only it should move to acts like the Insolvency Code or the SURFACE Act and so on and so forth. Now, that's going to happen only if you bring the financial institutions also as important stakeholders into the purview of the Act. The other thing is of Section 31, which is complaints which are allowed against only developers and real estate agents and all, I think it should also be allowed for all stakeholders in the project. So if you bring in all stakeholders in the project, that will bring in more accountability into the project. And that will also include section 37, where directions, the powers to issue directions today, which is limited only to a promoter or an allottee or an agent, I think should extend to all stakeholders. So bringing in all stakeholders into the ambit of the Act is something I would feel would be a good thing for the sector and should be done. Another issue that has been mainly talked about is that the orders which are issued by the various RERAs do not get implemented always. So therefore, I think this section 40 of the Act should try and bring in clear provisions to see how the orders can be further better enforced. And if possible, maybe this conciliation mediation should be given some more strengthening and institutionalizing in the Act itself by maybe adding a section in the Act which says that that should be the priority. Whenever there is a dispute, one should go through the conciliation route. And if it doesn't get resolved, then should go to the quasi-judicial route. I think at this stage, I will stop here. I think I have spoken quite a lot, and maybe I would love to hear from others. Thank you.
Thank you, Gautam sir. It was nice to hear you about latest development and legal issues in real estate sector. And you had covered ADR and all other things, what is going on right now in the market and in this sector. And as a regulator, what is your expectation with the professionals like CA and engineers and architect also? So thank you, sir, for your nice speech. And I request CA Amit Agarwal to give a formal hearty vote of thanks to Gautam Chatterjee, sir. Please, Amit ji.
Thank you, Pinky madam. I thanks on behalf of WRC to Gautam Chatterjee, sir.
Amit, just want to disturb you. Sir, one question is from a participant for you, that active contact detail like phone number and email ID of the builder and contact detail of the compliance officer of the builder are not available. Law should be mandated to have the compliance officers with their contact details, which should be available at RERA site.
The law provides for that. Actually speaking, if it is not available, then it is something which needs to be brought to the notice authority in the form of a complaint, because the contact details of the contact person is supposed to be there. And I'm sure it may not actually give the detail of the developer himself. But if it's an organization, if there is a person who is supposed to be the contact officer, his details, his email ID is available there.
Okay, thank you, sir. Amit, you can continue. Sorry for disturbing you.
No worries. I thanks Pinky. Thank you, Pinky madam, and I thanks Gautam Chatterjee sir on behalf of WRC for giving his valuable time and guiding and showing way forward to all the participants. Thank you, sir. And you have just brief us about the latest development and what expectations RERA has from the professionals, and how we see all members can fulfill your expectations. We'll see that all our participants will take this key word from you and keep in mind, sir. Thank you, sir. Without taking much. Thank you.
Thank you, sir. So, sir, I will request Gautam sir, I will request you to be there in panel discussion also. So if any question you can give answers, so we can ask you.
Okay, sure.
So please be there. I request you. So we will move forward for our panel discussion, in which our CA advocate Vinay Shraff is the moderator, and CA Vimal Punmiya ji will talk on direct tax. CA Naresh Sheth will speak on indirect tax, and CA Sunil Naik is on RERA. So I request CA Sachin Tulsian to formally introduce all of our stalwart of the sector. Please, Sachin ji.
Thanks a lot, Pinky madam. Am I audible?
Yes, sir.
Yes, sir.
Yes, sir.
A very warm namaste to all here. Good morning, Suprabhat. After such a wonderful address by Chief Guest Shri Gautamji Chatterjee, let me take this opportunity to introduce before you very august and learned panelists on the topic tax and legal issues in real estate sector. Let me start with introducing one and only Shri Vimalji Punmiya. Shri Vimalji Punmiya is a BCom, LLB, CA with 22nd rank in Inter CA and 35th rank in CA final. He is a practicing CA from last 45 years as a proprietor of Vimal Punmiya and Company, and with the help of 25 assistants attending to nearly 1,000 resident and non-resident clients in various areas of taxation, audit, company law, RBI, GST, cooperative society, stamp duty, etc. He is attached to nearly 1,000 companies, trust firms as advisor, director, auditor, and trustee. He is the member of a standing committee of TDS appointed by Income Tax Department, life member of Cricket Club of India and various other clubs and associations, honorable treasurer remarking of Mumbai Federation. He has written number of books on transfer of flats, stamp duty, registration, capital gains, search and seizure, HUF and family agreements, etc. He is speaker at 1,000 seminars in India, more than 1,000 seminars in India and abroad on the topics of public interest. He is a president of All India Business Council and president of Lions Club of Chopati. So his details and biodata is very long, and I think we all are aware of panelist. Our next panelist is CA Naresh Mehta. He's a chartered accountant practicing since April 1982. He's a regular speaker in seminar, conferences, workshops, and refresher courses organized by professional and business associations. He's author on service tax publication on real estate sector, published by Bombay Chartered Accountant Society, regular contributor to the indirect tax segment of annual reference of WIRC, visiting faculty for NACIN and certified accredited GST trainer. He's a regular contributor of articles in various professional magazines. He's a practiced as a proprietor of N.K. Sheth and Company Chartered Accountants from 1982, and now partner of N.S. Shah and Associates LLP Chartered Accountants, heading indirect tax division on merger of N.K. Shah and Company with N.S. Shah and Associates LLP. Our next panelist is Shri Sunil Naik ji. He's a BCom, FCA, CWA, ACS. He secured 6th rank in intermediate exam of the Institute of Chartered Accountants of India, 5th rank in All India Intermediate exams of Institute of Company Secretaries of India, and 9th All India rank in final exam of the Institute of Company Secretaries of India. He is practicing as a full-time RERA consultant, heading project registration and annual compliances for promoters. He is practicing as a founder partner of Thakur Naik and Deo Chartered Accountants since 1982. He is panel speaker in various conferences and seminars organized by ICI and real estate organizations on RERA. He is qualified arbitrator under the panel maintained by the Institute of Chartered Accountants of India. So that is about Shri Sunil Naik. And now we have the moderator, Shri Vimal Shraff ji. He's a LLB, FCA, AICWA, ACS, Advanced Diploma in Management Accounting from CIMA, London. Is practicing as an advocate at various high courts and Supreme Court of India in the arena of constitutional matters, direct tax and indirect taxation, GST, central excise, customs, service tax, VAT, foreign trade policy, FEMA, international taxation, etc. So with this, now floor is with our panelists and moderators, sir. Please.
So now I welcome all the panelists and moderator, and I request you to start the panel discussion for the benefit of the participant. All are eagerly waiting to hear from you all. Thank you.
Thank you, madam, for giving me this opportunity. And I am really delighted to be amongst such the stalwart of the profession in their own field. So we all know that real estate transaction is such a complex subject, considering there are various aspects starting from the conceptualization of a project to the various stages of completion and then finally handing over to the consumer. And there are legal aspects, there are tax implication, direct tax, indirect tax, the tax implication in the hand of the buyer also in form of the stamp duty, which stamp duty aspect will not be covering today. So there are various aspects in any real estate transaction, and we have fortunately with us speakers who are expert on their in their field. So straight away, since the time is very limited, so I will start with the questions to the panelists instead of giving my own comments on any of the topic or the subject. To start with, I think the common question which arises, and I think which I can ask to all the panelists, is with respect to development or redevelopment of a project, or the taxability of a transfer of development right. So this is a question, I think, which is particularly very relevant in the state of Maharashtra. So, I mean, the audience would like to know this, particularly this whole concept of the real development and the taxability aspect. I will start with Vimal ji, and then I will request Naresh Sheth ji and Sunil ji to answer this particular, to deal with this particular aspect of redevelopment.
Yes, sir. May I start?
Yes, sir.
Because I'm the first person to answer first question, so let me take name of all the person. My respected Pinky Kedia ji, respected Gautam Chatterjee, Naresh bhai, my friend, Vinay Shraff ji, Sunil Naik ji, and friends. Question is very relevant. When builder want to start the construction, either he purchase the property outright, or he makes a joint development with another landlord, or he construct the old building which is already constructed by the society, persons are occupying and building go under redevelopment, or there may be a tenanted building where somebody is the owner, another persons are the beneficiary tenant, and builder want to develop that. Now, as far as income tax part is concerned, things are very simple. If I'm buying outright property, I have to pay money. I am the owner of the land. Conveyance is in my favor. I develop, and there are two systems of accounting. Either I follow percentage compression method of profit or project compression method of profit. If I follow percentage compression method, then again there are whatever I want to follow, I can do. I can take certain percentage of the amount received during the year, certain percentage of the work completed during the year, certain percentage of the goods sold during the year. Whatever I want to follow, whatever the percentage, maybe 4%, 5%, 10%, 12%, I can decide. The income tax department cannot dispute that. Or if I feel if my project may take 4 or 5 years, there may be profit, there may not be any profit, there may be losses. So why I pay tax now, which I can pay in the end of the project completed. So that is not a project compression method. And I don't have to pay profit when project working in progress. When building is habitable, when I receive the completion occupation certificate and I hand over possession to the parties, at that point of time, I can pay the tax. And that also tax I can pay only on the goods which I sold. For example, I constructed 100 flat, 50 is sold. 50 I am giving possession, 50 is still lying in my stock. So stock always I can value at cost or market value, whichever is lower, and I don't have to pay tax on that. So definitely normal builder will follow project compression method. But for example, building is under redevelopment, landlord has to get certain shares, and there may be number of partners. Few may be only architect or engineer or chartered accountant or advocate, and one may be big financer like Mr. Nandani or some big builder. And then what will happen? Everyone will take profit every year. End of the day, liability of tax, those percent may disappear. So sometimes builder may prefer to pay on percentage compression method. Both are recognized. Here there was a number of complications. After 2002, up to 2002, there was no dispute. Every builder has to follow whatever he want to follow, percentage or project accepted by department. In 2002, our Institute of Chartered Accountant came with accounting standard. Accounting standard 7, accounting standard 9. And as far as income tax officer is there, he always try to complete make the more and more complication. And same happen in case of builder also. Because in income tax light of view, builders, film star, jewelers, doctor, they are always in the limelight for the purpose of survey, for the purpose of search, and they created all sort of complication. They say Institute of Chartered Accountants given the accounting standard. Now person cannot follow project comparison method. They have to follow percentage comparison method only. Matter went to the court. Court said Institute of Chartered Accountant can give a guideline how to maintain the books of accounts. How tax is to be charged. This is for the income tax department. Institute cannot say you pay tax on this, you don't pay tax on this. So all cases were decided in favor of assessing. Somewhere in 2006, then again things were settled, going on nicely. 2016, income tax department came with their own accounting standard, ICDIs. Now, as far income tax standards are concerned, they were naturally binding. It is a guideline of the income tax department. And again, when the income tax department say you to offer profit on percentage comparison method, you cannot follow project comparison method. So again, later on, many builder, Niranjan was the main person. They file a presentation to the Central Board of Direct Taxes, Finance Ministry, PM Office, and finally again in 2017, that ICDS connected with the builder has been withdrawn. So they say as on today, we can say builder can follow percentage comparison method or project comparison method. Now question comes second point of view. If I am a landlord, I don't want to sell my land. I want to have a future profit also. So I make joint development with the builder. Now what happened? If I make a joint development with a builder today, builder will give me, let us say builder will give me 50% versus whatever flat he construct end of the project. When project will be completed, when occupation certificate received, he constructed, for example, 100 flat, 50 he will give me and 50 he will sell in open market. Now in that situation, if I'm an individual and HUF, then I'm not liable to pay tax now when I give my land to the builder. Whenever I get the flat in end of 4th year or 5th year, that time I have to pay the tax. If I'm a company, I'm a partnership firm, and I give my land to the builder, then whatever land I've given to the builder, whatever possession I parted, because income tax concept, two things are very, very important, occupation and possession. Let me explain you. If I'm a tenant of a building, then I'm not in a possession of the flat, I'm in occupation of the property, because I cannot sell without the consent of a builder. I cannot mortgage with the bank without the consent of the landlord or builder. So I'm in occupation. If I parted with the occupation of the land with the builder, individual HUF, so no problem. Then whether I parted with the possession or not parted with, I'm not liable to pay the tax. If I make a conveyance in favor of the builder, I sell my land, then of course I'm liable to pay. But in case I'm getting money, partly flat. For example, I'm giving a builder constructing 100 flat. He will give me 50 flat and plus he give me 10 crore rupee. The 10 crore is also not taxable. It will be taxable in end when building is completed. So what is market value of the 50% flat? Whatever plus 10 crore, I will pay tax that time. But meantime, when builder give me 10 crore or 20 crore or whatever the figure, he will deduct TDS at the rate of 10% and I will get set off in the end of the project. But in case I'm selling outright to the builder, I'm selling lump sum 50 crore where I'm giving my land, not going to get anything. Then of course I'm liable to pay the tax. So in case I parted with the possession 100% under the conveyance deed, I'm liable to pay the tax as a landlord. Builder will follow percentage or project comparison, whatever he want to follow. In case I am making a joint development with a builder and builder will give me kind and partly cash or 100% kind, then I'm not liable to pay tax now. If I'm HUF an individual, if I'm other than HUF an individual, then of course, whatever land I've given to the builder, if I've given a possession, then I'm liable to pay the tax. If I give an occupation, let us say I will tell the builder, I'm giving you land just now. I'm making a joint development agreement with you. You apply to the BMC, you obtain all the permissions. You start your construction also, but you cannot sell your property, whatever flat comes to your share. You cannot sell till you receive the IOD or you receive the commencement certificate or till particular day. Up to that point of time, I parted with the occupation and not the possession. Then under section Transfer of Property Act or under Income Tax Act, I have not parted with the possession, so no transfer has taken place. I simply allowed him to enter in my property and do all the work. Then also I'm not liable to pay the tax. Third situation come, for example, I am the flat owner. Building is going under redevelopment. Builder has made agreement with the landlord, agreement with the society. The building will go under redevelopment. And as a flat owner, I am going to get, say, for example, today my flat area is 1,000 square feet. I am getting 1,500. Then the 500, if it is a long-term capital asset, if I'm holding the property for more than 2 years, then also I'm not liable to pay the tax under section 54. If builder is giving me hardship allowance, say 50 lakh rupee builder is giving me, then also not taxable, because BC Nivasan Sethi of Supreme Court and many other judgments have come. If builder is giving corpus money to the society, that amount is also not taxable. And if builder is giving me rent for 3 years to, I will be going somewhere else. So if the rent I'm paying to the somebody, I'm taking a really property on a rent and I'm paying less than what I receive, then difference will be taxable. If I'm paying more than what I receive, then of course there is no income tax. So I think overall, primary, this was the position in case of a redevelopment, in case of a joint development, in case of an outright purchase.
Thank you, sir. Thank you very much. Now I would request CA Naresh Sheth to deal with the issue of transfer of development rights,
Yes.
and the redevelopment issue in the context of the GST law.
So you
I
want me
request
to-
all the speakers to kindly keep their, I mean, since we have very limited time, so 3-4
I
minutes
will-
we deal with the each topic, so that I mean we
Yes.
can
So
conclude,
Vinay ji, I believe that my mandate is to speak on the development right, and I will stick to it only.
Yes, sir.
So transfer of the development right. Your question is whether it is taxable or not. That is your question.
Yes, sir. Correct.
See, how this problem is, this issue has been heavily debated in the GST law. The reason was, up to service tax regime, the transfer of immovable property was excluded from the definition of service. So it was a very settled principle that these development rights, being a immovable property, was never liable to service tax up to 30th June 2017. On 1st July 2017, when GST law has come, what the government has done, they have not excluded the immovable property from the scope of supply. What they have excluded is a sale of land and building. So that's why the dispute comes, whether the development right, can we say that the development right?
Sir, one second, I am interrupting you. I request CA Vimal ji and CA Sunil ji to kindly mute themselves because everything background noise is coming. So it is, I think, some sort of creating some disturbance.
Yeah. Sorry, sir. So in that case, whether the development rights, can we say that development right is a land per se? In my opinion, the development rights are rights in the land, but it is not land per se. Because the exclusion is only for a sale of a land. See, land is a bundle of rights. The development right is one of the component of the land. The transfer of one of the component of the land cannot amount to the sale of a land. Sale of land means selling the land by lock, stock, and bearer. After selling it, there should not be any reversionary right to the land owner. So development right, in my opinion, transfer of the development right is not a sale of a land. So that's why on a literal interpretation, the transfer of a development right is liable to GST. That is the first principle. The people argue on the constitutional ground that land comes under the subject domain of the state as per the constitution. But friends, my view is slightly different, because the GST was introduced wide Constitution Amendment 246A, and 246A overrides. 246 overrides, the earlier article which distributes the power to the state and center. So on the constitutional ground also, perhaps it will be very difficult for us to contest that under the constitution, the development right is, immovable property, it cannot be taxed through the GST. And we all know, Vinay ji being a, senior advocate, he knows that generally when the question of, the constitutionality comes, generally the balance of justice tilt towards the state. That is a, settled legal principle. So in my opinion, sir, the development right is taxable. Whether it is a development now, position, I am talking, see, from 1st July 2017 to 31/3/2019, development rights are taxable in my view. And the tax is payable by the supplier of a development right. By supplier of a development right. Only dispute here is, controversy here is, when the society goes for the redevelopment, society transfers the development right to the builder. Can one say that okay, this is in course or furtherance of a business? Because supply, in order to be taxable, it has to be in course or furtherance of a business. And the society, we can always take the position that cooperative housing society or society is not in business. So somebody is not in a business, so no transaction can be in course or furtherance of business. Okay, otherwise, any other landowner, if he transferred the development right during the period 1 July 2017 to 31/3/2019, in my view, it is taxable. It is taxable in the hands of the transferor of the development right, and it is taxable at the rate of 18%. This is the situation. But what happens after 1/4/2019? 1/4/2019, the law has revamped. And in revamping of the law, one of the situation, now they are taxing the builders at the rate of 5%, 1% for the residential properties and 12% of the commercial properties. And the law is very simple, that in that case, if you are using the development right for under construction flats, the development rights attributable to under construction flats are exempted. Please understand, development rights are leviable to tax and then it is exempted. So development rights attributable to under construction flats are exempted. In other words, what is taxable? The development rights which are attributable to unsold flat is taxable. Development rights attributable to unsold flat is taxable. And you have to work out, I'm not going into the mechanism, you have to work out how much development rights are attributable to the unsold residential flat. You have to value it, and first you have to work out 18% thereof, and then you have to work out 5% of the value of the unsold house, and whichever is low, out of these two calculations, whichever is low, that is the tax payable. That is the tax payable in respect of a development right. So this is what, and about the commercial units, there is no exemption. The commercial units, the tax, development rights, attributable commercial units, the tax has to be paid. Now the only thing is this, after 1/4/2019, the responsibility of discharging GST is casted on the developer. So landowner, whether I'm a society or I'm an individual landowner, I have not to worry at all about the taxability of a development rights which are transferred on or after 1/4/2019. With this, I rest my case.
Thank you very much, sir, for a very short and very, at the same time, very elaborate discussion on this topic. Now I would request Sunil Naik ji to discuss about the RERA implication on the redevelopment scheme, and also at the same time to discuss the RERA impact on the slum rehabilitation scheme.
Thank you so much. Actually, it is a difficult task because Gautam Chatterjee sir is sitting there. He is the man on MahaRERA and RERA. So in his presence to address any query or question is a difficult situation, but I'll try my best to handle the situation. Friends, the development rights is a right wherein the real estate project comes into birth. So development rights under RERA is very clearly stated that the developer who takes up the rights becomes a promoter. He has to register himself as a promoter under RERA and make sure that he makes all the compliances. So by default, a developer who is taking over the development rights in any form, whether in the form of a land being acquired, whether in the form of a society rights being acquired, whether in the form of a reconstruction of an existing structure or anything of any type, becomes a promoter, and he has to be under the provisions of RERA. That is a very clear-cut provision. Now, as regards the redevelopment, there are multiple situations because the RERA in Maharashtra has not recognized redevelopment as a development activity per se under RERA, which means that an allottee is defined as a person who purchases a property from a developer or a promoter by paying monetary consideration. In case of a redevelopment, the consideration being offered by the member who is displaced is in the form of existing premises. But the position taken by the judicial authorities is that in such a case, the society or the landlord is also a co-promoter, which means that he has not been classified as an allottee, but is being classified as a co-promoter. And under the law, he is required to make compliances so that he is also governed under the law. So RERA says that you are a co-promoter and not an allottee. So all the obligations cast upon a promoter are made applicable to the society or to the landlord. Similarly, he is required to submit all the information under the law to the MahaRERA authorities. The basic purpose, the way MahaRERA looks at it, is that both the landlord and the developer should be accountable for the benefit of the allottee. Because as all of you know, RERA is the legislation for the welfare of the allottees. So to make sure that any differences or disputes between the allottee and the landlord, rather the landlord and the developer should not penalize the allottee. So in case of RERA, all the obligations are equally cast upon the landlord, the society which are redevelopment, and the promoter in an equal manner. Only thing is that the division of responsibility will be on the basis of the commercial contracts as entered into between the landlord, maybe the society, and the developer. So redevelopment per se, yes, is covered under RERA for the benefit of the sale portion. But as regards the redevelopment portion, wherein the old people who are residents are going to get the rehab flats, RERA does not protect them under this law. But you have other laws to protect you. The Consumer Protection Act is there. Old MOFA is there that can take care of that situation. Now, as regards Slum Rehabilitation Authority, SRA, which is the slum authority, again, RERA has not taken into its ambit the SRA projects. So SRA projects remain out of the ambit of the RERA. The various associations have made representations to the government of Maharashtra that the redevelopment projects as well as SRA projects should also be covered under RERA, so that those people who are sacrificing their existing houses for the benefit of redevelopment also get protection which is available under RERA. RERA law basically is a law which is brought in to protect the allottee from the wrongdoings of the developers and the promoters. So here, this is an area wherein there is a gray area left out in Maharashtra, wherein the SRA and the rehab projects are not still fully covered or not fully being protected under the RERA. So this is a thing which has been under discussion with the government of Maharashtra. A lot of forums have put up this to the government of Maharashtra, and it is being considered. I was also in one of those meetings wherein it was presented to the ex-CM, Mr. Devendra Fadnavis, at that point in time, and it was being looked into. We hope that a day will come that these two things, the rehab projects as well as SRA projects, will be covered under RERA. So that day is not far off. We will see those people also being protected under RERA. I give it back to you, Mr. Coordinator. Please go ahead.
Thank you, sir. Thank you very much for the very wonderful clarification on this particular issue. And now I request Vimal sir to deal with the issues relating to compensation on compulsory acquisition. So first question is the taxability of the compensation and on compulsory acquisition. The second, an important connected issue is what if the compensation is received in installments? So how the taxability is to be determined in that case. And lastly, the issue is whether compensation for compulsory acquisition of agricultural and non-agricultural land, how the taxability is to be determined. I have raised this question, these three questions, connected question at the same time, so that you can discuss all the issues at the same time. You can kindly take around say 10 minutes to discuss all these three questions. Thank you, sir.
Now, sir, first item was compulsory acquisition. Now, if government, state government, central government, any government body acquire anything compulsory for the public purposes, after 2014, that amount is not taxable at all. Before 2014, if government acquire anything for public purposes, then it was like this. For example, they acquire my land today for road purpose or making some government building or whatever. and they give me compensation. Normally, government used to give very less compensation, and person used to challenge it and again file, and then sometime you will get some interim amount, then we'll get final amount, and goes on and on. So before 2014, everything was taxable based on the amount received, not on the base of market value or what government has decided. Whatever amount I've received in a particular year, in that year it was taxable. Subsequently, I received another some amount after 5 years, then after 15 years, and like that, every year was taxable on basis of receipt. 2014 law was amended. They say government acquire anything, and now they pay very heavy amount. Recently, one of my clients, they acquired the property somewhere in Goregaon or Malad for public purposes. Real market value, hectare value is only 50 lakh. But he was getting nearly 50 crore from the government because of various formulas and various things. So that amount is completely exempted. So as far as compulsory acquisition is concerned, it was exempted under the Compulsory Acquisition Act. ITO created some problem again. Can in income tax provision, all the out of 300 section, there is no exemption is available. But board have issued circular, and they say right from 2014, whenever government acquired after a particular day, compulsory acquisition for public purposes. If recently I have seen a judgment, a municipal corporation has acquired something, which is not state government, which is not central government, but even that is treated as exempted. So that one part is clear. Second part is concerned. When you say sale of agriculture,
just one corrected question. So you say that it is exempted, means it is exempted by virtue of a particular provision or by the judicial interpretation?
No, provision also. Board have issued circular. So it is covered under section 1037. Compulsory acquisition will be free. Yeah. And then we come to the sale of the non-agricultural land and agricultural land. Now, whenever you sell any non-agricultural land, whether it is situated in a village or a city, it is a taxable. There is no confusion on that. As far as agricultural land is concerned, before amendment, law was that if your municipal corporation, this land is situated at least 8 kilometers from municipal corporation, and population of that place was less than 10,000, then it was exempted. Now, all municipal corporations, city like Bombay, Pune, Nasik, Nagpur, all are expanding like anything. So that 8 kilometers is now difficult to get. So now government has amended the law, and they say if municipal corporation, population of municipal corporation is 10,000 to 1 lakh, and land is situated within 2 kilometers from municipal corporation, then it is a taxable. Even sale of agricultural land. Non-agricultural taxable, hey, whatever way system. And if land is situated 2 kilometers away from municipal corporation, and population of municipal corporation is less than 1 lakh, then it is exempted. If population of municipal corporation is less than 10 lakh, and land is situated within a period of 6 kilometers, then it is taxable. If a land is situated beyond 6 kilometers, and population of municipal corporation is less than 10 lakh, and beyond 6 kilometers, then it is exempted. If population of municipal corporation is more than 10 lakh, and land is situated away from more than 8 kilometers, then exempted, within 8 kilometers taxable. But for that purpose, what we need is one certificate from the Patwari, whether population of that particular village, population of the, now earlier we used to need a Patwari approval. What is the population of that village and how many kilometers are there for municipal corporation? Now we don't need approval of Patwari. We can go on the Google map and find out at the time of sale from the boundary of the municipal corporation, whether it is 2 kilometers or 6 kilometers or 8 kilometers, whatever is there. Old law is still there. If population of that village is less than 10,000, away from 8 kilometers from municipal corporation, then it is exempted. But they're given more concession to 2 kilometers, 6 kilometers, less than 8 kilometers. So, as far as distance is concerned, we have to take aerial distance. Because aerial distance, how to take? Either person will go by road or by train. But now we have to take on the Google map. As per aerial distance, so you can cover more and more area. Because Bombay to the Dombivli is more than 25 kilometers. But if you take an aerial distance, it is less than 25 kilometers. So more area can be covered. So as far as agricultural land is concerned, now it is very clear. You have to go as per the area system, area of population of municipal corporation, distance from the municipal corporation. That is exempted or taxable, one can decide. Non-agriculture, 100% taxable. And sir, what was the third question? I forgot it. Two was this issue, agricultural land and compulsory acquisition.
Third question was if the compensation is received in installment.
Now, if I sold the land, installment as far as compulsory acquisition is concerned, I told you earlier it was installment was taxable, and as far as when you are now after whether installment or non-installment, it is exempt. But let us take example, I have a land of say 100 acre, and I sell 100-acre land. Part with the possession of the land, I sold say for 50 crore rupee. I received only 10 crore. Still, I parted with the possession. I'm liable to pay tax on a 50 crore. But I sold only my part of a land. I sold only 10 acre of the land, not 100 acre. And I received money also for 10 acre. Then I'm liable to pay tax only on 10 acres. Let us say I sold land only for 10 acre. And I received money for the 100 acre. Then also I'm not liable to pay tax on 9 acre, because under Income Tax Act, possession word is very, very important. And possession, what is possession? It is not defined in Income Tax Act. So we have to go to the Transfer of Property Act. And the Transfer of Property Act, Section 53A talks about the possession and part occupation. Section 54 talks about possession. I made a conveyance in favor of party. I handed over possession. Whether money received or not received, amount is taxable. But there is another section called Section 53A of Transfer of Property Act. A reference of Section 53A of Transfer of Property has been given in Income Tax Act. What is transfer for the purpose of Section 247 of the Income Tax? I will not bother much with the section. Let me give the gist. What is the concept? Now, here what happened? If I made agreement for sale means final sale will take place at a future date. But I parted with the possession. Then I'm liable to pay the tax, whether money received or not received. And 53A say, I have given everything to the purchaser except the conveyance. If I given a conveyance, then the naturally land belong to him only. Possession implied. But in case I've given everything, whatever I can do, same power I given to builder. Then what I can do, I can sell the land. I've given that power to the builder. I can mortgage with the bank. I've given same power to the builder. Then even I'm not received the money, still I'm liable to pay the tax if I parted with the possession and as per Section 53A or Section 54 of Transfer of Property.
Thank you very much, sir. Thank you very much. My next question is to Naresh bhai. Sir, this long-term lease of land, the taxability is a vexed issue. Particularly, there are a number of judgments where this again and again it is debated whether long-term lease can be equated to sale of land or the sale of the property. And we have a judgment of the Honorable Bombay High Court, even though in the context of the RERA regulations, to decide whether the RERA is applicable to long-term lease of land or not. And here there was an agreement for lease for 999 years, and almost 80% of the cost was paid, and substantial amount of stamp duty and registration charges were also paid. And lease rent was very nominally fixed. So it was decided by the Honorable High Court that even though the nomenclature of the agreement is agreement for lease, but in real terms, it is agreement for sale. So the Honorable Court decided that the document has to be read as a whole and the intention has to be looked into. And in reality, the transaction is agreement to sale, and therefore the RERA will apply. Now the question arises in the context of the GST law, whether the long-term lease of land is taxable, and particularly the long-term lease by the governmental authorities like CIDCO, MITC, etc., whether it is exempt or liable to GST, whether it is in form of a one-time premium or say yearly lease. So your view on that, sir?
Yeah. Thank you, Vinay ji. I have already dealt with what is excluded is the sale of a land from the GST law. Otherwise, if something does not amount to a sale of a land, it is not excluded from the GST domain, sir. As a, the MIDC or CIDCO, they lease out the property, they are not transferring the ownership of the property. So in my view, on a literal interpretation, strict interpretation, the leasehold rights are liable to GST, and that has been held by the Bombay High Court. The same Bombay High Court in the case of MCHI, and there was some name of other builder, I've forgotten, he is my client only, but I've forgotten the name. They have lost the case in the Bombay High Court. Bombay High Court in the case, that case particularly held that this is liable to GST and the matter is pending before the Honorable Supreme Court. But you know, Vinay ji, my personal view is there is no intendment in the, there is no equity or justness in the tax law. You have to read the tax law as it is, you know, written in black and white. The court cannot rewrite the law. So in my view, sir, the leasehold rights and the legislative intent is absolutely clear. Okay, they want to tax it. GST law, they want to tax it. Why I am telling you, sir, the GST law has given an exemption to the leasehold rights in respect of the lease granted by the associations like, you know, state associations like, you know, state undertakings like SIDCO, MIDC, leasing of an industrial plot for a lease period of 30 years or more. They have given the exemption. So, you know, granting the exemption that speaks of the legislative intent. Okay, otherwise the lease is taxable. So please, sir, you know, in my view, leasehold rights for a residential plot is always taxable, whether it is for 30 years or more. See, this is basically, you are not a legal, the legal ownership is not transferred unless and until the law is changed. See, I appreciate that it is a quasi ownership. See, so basically quasi ownership. Generally, in the normal perception, whether I am the leasehold owner or I am a freehold owner, I am an owner of the property. But you know, the law has its own peculiar method of dealing with the issues. So, in my view, unless and until Parliament change the law, I think the leasehold right will be taxable. There is no issue on that. And secondly, sir, after 1/4/2019, after 1/4, during the period 1st July 2017 to 31/3/2019, the lessor was liable to pay the tax on the premium, one-time premium on the leasehold rights, sir. After 1/4/2019, the leasehold rights, as far as taxability is concerned, it has put at par with the development rights, sir. It is the developer who has to pay the tax under reverse charge in respect of unsold residential area or in respect of the commercial units. So the law is very clear, sir. It is taxable and the tax has to be, liability to discharge the tax is on the developer. Now that institutions are absolved of the responsibility of discharging the tax. I think with this, I'm done with my answer, sir.
Yes, sir. Thank you very much. So as
only one thing just I wanted to tell, about that Vinayji's first question was there about that, compulsory acquisition. In the GST also, there is a dispute is there, whether the compulsory acquisition is liable to, GST or not. I am taking the view that is nothing but it's a transfer of a land. It's ultimately you are transferring the land to the government and land is excluded from, the GST net. But unfortunately, the wording in the schedule is sale of a land. So whether the acquisition of land can be equated with sale of land, that, that will be the brewing controversy in years to come. I think government should do it, make it very clear that acquisition of land for a consideration, nothing but it is sale of a land. Sorry, sir, I have just taken 1 minute more.
No, thank you very much, sir. I mean, I really appreciate that all the connected issues are taken together for the benefit of the audience. So if I can summarize my understanding that if the lease is for more than 30 years, then, and if the lease is granted by the government authorities, then it is exempt.
For an industrial plot, sir. For an industrial plot, sir.
Only for industrial plots.
Yeah.
So even for the, even if the lease is allotted by the government authorities and it is allotted for the purpose of, say, real estate development, residential plot, then it will be taxable.
Taxable subject to the exemption given after 1/4/2019 of leasehold rights attributable to under construction flats, sir.
Right. And even if it is, in any case, all long-term lease, whether by the private party, is taxable.
Yeah, sir.
Whether it is for 30 years, 90 years, 990 years, it is immaterial.
Subject to, sir, Honorable Supreme Court taking view on this, because this matter, CIDCO matter, is lying with the Honorable Supreme Court.
Right. I mean, I believe there are a lot of issues will ultimately land up in Supreme Court, particularly with respect to real estate. And I believe that even this issue of development right will go up to the Supreme Court someday or later, because I mean, many hold a different view that the development right, there is a irrevocable transfer of the right in the land to the developer by the landowner. So therefore, it should be equated to sale of land. So people have that view also. And I think it will be litigated, and in the time to come, it will end up in the Supreme Court. So my next query is to CA Sunil Saab. Sir, my question is with respect to how the chartered accountants can contribute and take it as an opportunity for their professional development in the context of RERA. While I mean, it has been explained as to we have a duty under the law, but how the chartered accountants can take it as a professional opportunity.
Sir, Sunilji himself is an example, living example of this, sir. How we have taken this.
So I mean, the younger members should benefit from his wisdom.
Thank you, Naresh ji. I take it as a compliment, because yes, I am full-time into RERA practice, and I have left my practice of 37 years, the traditional practice, and joined RERA. So that itself will indicate to all of you that there is tremendous potential available in RERA for all the chartered accountants. See, the first time in the history of the Indian government, there is a law which has been brought in, wherein the professionals are made the custodians. First time, all chartered accountants, architects, and engineers are made the custodians by virtue of the law to implement the law. The law wants the chartered accountant to perform his duty ethically in the interest of the allottee, though he is getting paid by the developer. This is a very difficult situation, but yes, it has to be handled in a very professional way by all of us. See, for all of us, RERA is the Lakshmi which has come to our house, knocking at our door. Because in RERA, for a chartered accountant, there are multiple opportunities which have been created, right from registration of the project, wherein we are the only competent people who can register the project in the right way. I'll explain to you how. Because we are required to give all the certificates from 1, 2, and 3, and all the information to the authority while getting the registration. All the information has to be compiled and collated in a very proper professional manner, and that is the acumen that we have been granted by our institute. See, we are the people who can take a 360-degree view, a wholesome view of a project, to make sure that all the figures which are being given by different professionals are matching and they are coordinated, synchronizing with each other. We are the only people who can understand that number, because if you look at the certificates, you are totally opening the project for the benefit of all and sundries. And that sundries includes the government departments also. The information about the project, the celebrity, the revenue potential, the cost, the expenditure involved, all those numbers are being certified by various professionals for the project. And those numbers are in the public domain. Today, RERA, GST, and income tax are interrelated. So all the numbers which you submit at time of registration or subsequently are available to all the departments. Just giving an example, suppose the architect says or the CA says that 40% is the completion in form number 1, 2, or 3. And when you finalize the accounts, you are showing only 32% completion as per the project completion method, then your own submissions are going to go against you. And that is a situation only a chartered accountant can tackle and nobody else can tackle. So we are the only people, honest to God, we are in a position to take a wholesome and holistic view of the entire project for the benefit of the promoter. Secondly, As regards the allotee is concerned, it is our paramount duty to make sure that all the information about the allotee is also covered by us. Just giving an example of an allotee who is an investor. He doesn't want to pay GST, doesn't want to pay stamp duty, doesn't want to go for registration. But there is an entry in the books of accounts which has been reflected as an unsecured loan or as an advance. Now, RERA wants you to verify the records whether there is a letter of allotment issued to that party or not. If it is issued Form 3, if you see it meticulously, it says consideration as per letter of allotment / agreement to sell. So the law expects you to cover that in the certificate. So there is a clash of interest, because in case you show that flat as an unsold flat, you'll come into trouble tomorrow, God forbid, if the project doesn't get completed, then you'll be in serious difficulty, because therein you acted in connivance with the developer to defraud an allotee. So my dear friends, Form 3 and Form 5 is the next opportunity for us. And we are the only professionals who can give it to the developer. No other professional is given that authority under RERA to issue Form 3 and Form 5. So this is the opportunity only for chartered accountants. But unfortunately, I have seen many chartered accountants issuing certificates without bothering to look into the information, without bothering to verify the information. Friends, that is a certificate. It is not a report. A certificate is a statement of facts. You're supposed to verify the facts and only then certify it for the benefit of the department. RERA can come heavily on you. But if you see Form 5, the proviso to Form 5 clearly states, in case there is any discrepancy which is not highlighted by the chartered accountant, in that case, the institute concerned shall take the matter at a proper level. The word is shall, not may. So it is obligatory on the part of the institute to take up such matters, and the further proviso says that the penal provisions may include dismemberment. So friends, RERA opens opportunity for you to issue certificates, but with the proviso that you should do it in the professional, ethical manner and not to accommodate the client. Friends, you have the opportunity to do it in a proper manner. Do not waste the opportunity. Plus, RERA allows you to fight the litigation on behalf of the client. So you are allowed to represent the client in the MahaRERA forum, the conciliation forum, as well as the tribunal. So all three forums, we are allowed to appear on behalf of the client. So that is the third opportunity which is coming our way. The fourth one, which is the regular compliance, because the regular compliance has to be done on a quarterly basis. Certificates have to be issued on quarterly basis. You are again the only person who can coordinate between the developer, the architect, the engineer, and the chartered accountant issuing Form 3 to make sure that the information is properly given in the proper manner and a synchronized manner. So friends, there is sufficient opportunity coming your way. In addition to that, the multiple opportunities in the real estate sector, in spite of RERA, whether you do RERA practice or not, there are further opportunities, but that is not the point of discussion here. RERA is opening you 4 things: the registration, the certification, the compliances, and the litigation. So my request, all the fellow members, that take up this as a professional opportunity, create a vertical, and it is not that difficult. The law is a very small law. There are good judgments given by the authority, which are clear in nature, and you can easily practice them. For complicated things, you can always refer to the seniors, but 80% of the work can be easily handled by any chartered accountant, where all of us are well equipped with the knowledge of this subject. I get back to the Vinay ji, please.
Thank you very much, sir. With respect to the litigation opportunity, I would just like to add a few words that I believe it is very important to understand the bare act by repeated reading of the act and the relevant rules to interpret the law. And also there are certain terminologies, there are certain aspects of the law wherein the jurisprudence may not be available as of now within the purview of the RERA law, but we can always do a research and try to find out whether those aspects have been dealt with in any earlier, in any different law, in a similar context. And then I think we can develop the jurisprudence aspect the interpretation of the law also is very important. So anybody wanting to do a litigation practice should have a very good background in the interpretation of the statutes also. So there are some fundamentals, I think, which we need to develop in order to have a litigation practice. Yes, sir.
No, sir. I'll beg to differ here, because see, we are blessed with the knowledge of the subject. We know how to have 100% reading of the subject. If you see the litigants, most of the advocates, they only read that portion which is required to be dealt on that particular date. आज date लेना है, उसके लिए काम करना है. We as chartered accountants, we have got this system that we go through the entire case, make our entire defense ready before you go and attend the case. So we are actually speaking, honest to God, we are more equipped than the other professionals to handle the subject. One. Secondly, we are not competent to address the courts in the way they want, the legal language and the legal plethora of words. But that can be taken care of, because I have been attending tribunal, and any day when I attend a tribunal, the whole day I spend in the tribunal just listening to other advocates, senior counsels, how they present themselves. So this is a skill which can be acquired over a period of time. We are not trained for that. Yes, we lack the training there, but that can be acquired easily by all of us by applying our knowledge and using the benefit of the forum available, because the tribunal you are allowed to attend and listen to the counsel. So you can do that. And with that, our knowledge can be sharpened easily. So we are.
No, I totally agree with you, sir. And I am myself a chartered accountant converted to advocacy, and I did not get training under any advocate. I just learned it by sitting in the tribunal and by in the court. So over a period of time, I have done. So that is what I just wanted to convey, that a chartered accountant is the best suited person, because we are used to reading, we are used to having the hard work, so we can easily develop this litigation practice. All that I was trying to convey is that it is very essential to have some basics, like the reading of the bare act again and again, and have some understanding of the jurisprudence to interpret the law. Because in any litigation, it is important to understand and decode the jurisprudence to be able to handle the litigation. For example, in GST, I mean, it is an amalgam of central excise, service tax, VAT, central sales tax, and all that. And most of the terminology and disputes which are going to arise in the GST era, 80% of the issues have been dealt with in the earlier regime. So if one is able to read those earlier jurisprudence, then one can easily deal with the litigation in the present GST era also. That is what I was trying to convey. So my next question is to Vimal sir, and this will be the last question before I take up the audience question. Last question to each one of you, one question each, last round rather. So my question, sir, is with respect to the taxability, where a builder purchases a land for say 50 lakh and sells it for a profit of say 60 lakh.
Yes, sir. Now, actually, what happens, sir? There always in balance sheet two type of assets appear. One appear as a stock in trade, and second appear as an investment. Now, if asset is appearing in the investment, now builder who is the normally purchase the land, construct, sell the flat, purchase the land, sell the land, still everyone have option how to show in the balance sheet. Let us say I am a builder. The day I make the payment, I can decide whether I want to invest as an investor or as my business. If I want to invest as an investor, then it will go in the heading investment. If I want to invest as a stock in trade as a builder, then it will go into the work in progress or in the stock in trade. Now later on, I decide my investment want to convert into stock in trade, I can do that. I want to convert my stock in trade into investment, I can do that. But then of course there is a formula, we have to do it at market value. But first year when I purchase, I have option. Now let us assume I purchase the land for 50 lakh rupee and it is appearing as my stock in trade, work in progress. And I want to sell, I sell for 60 lakh rupee. It means I made a profit of 10 lakh rupee. So that will be normal business income, will be shown in a profit loss account. All other expenditure income will merge with that. And finally, I'm liable to pay tax as a rate, my normal income, depend individual different percentage, firm, company, or whatever percentage there. Now, assuming I've shown as investment, and I purchase the land and I'm selling after 2 years. Then after 2 years, so I will able to get indexation of 50 lakh, which may be say 62 lakh. If I sell within 2 years, then it is short-term capital gain. Same treatment, whatever was for stock in trade. If I'm selling after 2 years, then it will be long-term capital gain. I can get indexation of 50 lakh. Then whatever left over will be liable to tax as a long-term capital asset, which will be 20%. And in case I want to invest those money under certain bond for 50 lakh rupee, money will block for 5 years. I will earn interest of 5-6%. Then of course it is not taxable. But here one thing is very important. In case I'm a builder and I purchase the land, now for example I purchase for 50 lakh rupee, and it is appearing as my stock in trade, and I'm selling for 60 lakh rupee. But market value of the land is 70 lakh rupee. Then I'm supposed to work out my capital gain under section 56. If it is stock in trade, then there's section 43CA as my 60 lakh as a sale value, and balance. So my even sale value is 60 lakh and market value is 70 lakh. My capital gain will start working with the 70 lakh. So I'm liable to pay tax on the 70 lakh. Let us say this item is appearing as my investment. Then section 50C will be applicable because section 43CA deal with the stock in trade, 50C deal with capital gain, and the value will be substituted for 70 lakh. Now let us assume for 1 second, here I feel my 60 lakh is the correct value. The reckoner value may be 70 lakh, I don't agree with that value. Then whenever stamp duty department charge me stamp duty on 70 lakh, that time I can challenge number 1, and whatever happen for the stamp duty value, that will be final decision. Or I pay on 70 lakh stamp duty, whatever is applicable, and I can file with that. When the income tax department raise any question, your value is 70 lakh and you sold for 60 lakh, so which is up to 10% margin is allowed, but your difference is more than 10%. So you pay tax on 70 lakh. That time I can write to ITO, refer this matter to valuation sale of income tax department, and if income tax department value within a margin of 10%, 60 lakh up to 66 lakh, then of course there is no problem, my 60 lakh will be accepted. During the litigation, debate is allowed to the extent of 15%. And of course, many plus and minus points are there. So this will be the capital gain, stock in trade. Here, let me add for 1 second another point. In case I am the purchaser of a land from a builder, or purchaser of a flat from a builder, or purchaser of a flat from some outsider, market value is 70 lakh, I made agreement of 60 lakh, difference is more than 10%, then the difference will be that, so 60 lakh minus 70 lakh, 10 lakh will be added as my income from other sources. Purchaser point of view, other sources, seller point of view, sale value or capital gain. Now, in case I feel that 70 lakh is not correct figure, 60 lakh is the correct figure, the same procedure I can follow. When ITO raises the question, I can tell him, yes sir, refer to valuation sale, and valuation sale may everything normally comes under control. Thank you.
Thank you very much, sir. Now I ask a question to CA Naresh Sheth. Sir, my question is very fundamental and basic question to taxability with respect to the valuation issue and the rate of tax. So my question is that the law mandates to exclude 1/3 of the total value of the land at the time of making payment of the tax, that is GST. That this is a deemed value. So now the question arises is whether I can exclude land value at actuals. Particularly, you see in some area like Maharashtra, the value of land is very high compared to the overall cost of construction. So whether I can exclude the actual value of the land, because the land is not supposed to be taxable under the purview of the GST. Second is with respect to this rate of tax, that from 1/4/2019, the rate of tax was reduced to 1% with respect to affordable housing and 5% with respect to non-affordable housing. But at the same time, ITC benefit is not available to the developer. So the question is whether the consumer has benefited in the real terms, because the rate of tax on the cement is 18%. So whether this benefit, whether the consumers have really benefited, and if at any developer wants to go with the full rate of tax with the benefit of ITC, whether he can do so in the interest of the ultimate interest or the benefit of the consumer.
Sir, you raised very, very fundamental issue. See, the 5% tax, 1% tax without ITC, in my opinion, is a presumptive taxation. In the sense, the government thinks कि पहले जो 12% का tax था, the developer gets the sort of 7% ITC, so net rate is the 5%. So let us in order to come out of the janjat of whether the ITC has been passed on by the builder to the customer or not, they have come out with a presumptive scheme of taxation. I will charge you 5% tax, 1% tax, but you don't take the ITC, etc., etc., etc. So the first and basic fundamental principle is, can the presumptive taxation can be thrusted upon the assessee? In my view, presumptive taxation is for the tax, basically it's for the facilitation. It cannot become an obligation on you. If the law, Parliament wants you to pay the tax on the actual value of a construction services after taking the ITC. ITC is your, sort of a, very valuable right. So simply because, you have to give an option to the assessee. Either you take this or you take this. And these options are really available in the GST law itself. For rent a cab, for GTA services, they have given both the option. If you want to go for presumptive, go for presumptive. If you want to go for actual, you go actual. But simply thrusting off and presumptive taxation, which may be unfair to the citizen, I think that is fundamentally is not permitted. In my view, it can be, it's not permitted under the law. And the similar, the matter is pending before Honorable Gujarat High Court on the same issue for the restaurant services. In the restaurant services also, they have, said blanket 5% tax without any ITC. In a city like Mumbai, where most of the restaurants are on the rental, and rentals are so high that the restaurant owner are suffering a huge loss because of that loss of the ITC credit. So the Hardcastle Restaurants Private Limited, that Hardcastle Restaurants are the people who are running the McDonald's chains. So they have gone into the writ petition challenging this provision, and whatever applies, whatever the grounds are taken in the writ, in that particular writ petition, the same thing applies to the builders and developers also. So I will just briefly tell you what are the grounds that has been taken and what are the view that I am holding the view. First, no authority under the law to restrict the ITC through the rate notification. Please understand, sir, rate notification is issued under Section 9 of the CGST Act, and Section 9 is very clear. The subordinate authority is only empowered to issue the notification just for the rate. Through the rate notification, you cannot restrict the ITC credit, because ITC credit comes to you by Section 16. If you were to restrict it, you should have blocked it under Section 17.
Right.
By rate notification, indirectly, you cannot block my ITC. That is the first and foremost thing. Section 9 is not a section under which you can restrict my ITC. Secondly, as I've told you, mandatory rate without ITC is a presumptive taxation scheme, and I'm not recollecting some citation. I think in the past, Supreme Court has said that presumptive taxation cannot be thrusted upon the assessee. And if you see, we have a Gujarat High Court decision in the case of a Munjal Manish Bhai Bhatt, which you are referring to the land deduction case. I will coming to that. Even in that case, the observation of court is the 1/3 deduction for the land is a presumptive deduction. You cannot thrust upon the assessee. So, this cannot be thrusted upon the assessee, and such rate regime is discriminatory in the nature and is violative of Article 14 of the Constitution of India. That is one of the grounds that has been taken. Because all other assessees are getting this benefit, why I am being singled out? Why I am being singled out? And such rate, such kind of, provision is basically, the entire GST law has come for avoiding the cascading effect of the tax on ultimate consumer. So if you give the credit, then the cascading effect of tax is, not there on the consumer. But by denial of the ITC credit, the cascading effect, this is basic, again, the basic canon of the GST law. And sir, now last argument, that if you see go on the literal interpretation of the notification. They say rate of 5%, 1%, provided you don't take the ITC. So law doesn't say that if you apply 5% and 1%, you cannot take the ITC. It's the other way around. If you take ITC, the rate of 5%, 1% is not available to you. So in my view, this is something, is challengeable and one should challenge it. But generally builder, I have been connected with some, associations, builders association, etc. They say we also don't want to fall into that, trap of anti-profit rearing and other thing, So let us be that janjat jane to ITC ka. We have to collect 5% from the consumer. We'll collect it and pay it. So this is what the practical position the trade has taken. Now I'm coming to your second question, whether the land. See, in the Bombay, it's very common, sir. So Punmiya sir जहाँ रहते हैं sir, वहाँ FSI का भाव 50,000 रुपया है sir. Correct sir? And भाव जो है फ्लैट का भाव 70,000 rupees square feet है. So sir 50,000 के ऊपर, I am getting the deduction. What I am getting the deduction of 70,000 ka only 30%, 33%, around 20, whatever 21% or whatever maybe I am getting, as against the land of a 50,000 rupees. So on 29,000, I am paying the tax on the land, which is really not envisaged. This is not the the land. The government want to keep it out of this, but some unfortunately, so Manish Bhai Bhatt, Gujarat High Court case law, it's a state case on this. They say this is the presumptive method. If you bifurcate the price of the land and the price of the construction services in your agreement, then you are very much within your right to pay the tax only on the value of the construction services, because land is outside the net of this. But only practical issue here is, and I would, sir, on your behalf, sorry to take the liberty, but I would like to have the opinion of Sunil Bhai on this, because my understanding is this: under the RERA agreement, the bifurcation of the land price, and this is not permissible. And in Mumbai, no developer, 90% of the developer is not constructing on the virgin land. They are constructing by exploiting the development right or a leasehold right. So in fact, I am not transferring as a builder. I am not transferring the land to the, ultimate, the land buyer. So sir, Munjal Manish Bhai Bhatt is very clear. And I believe that this, till date, this matter has not moved to the Supreme Court also. So perhaps I think the government has perhaps accepted this position, this seems. But they have the time to, because condonation of delay, with condonation of delay, they can go to the, REIT. So sir, with this, the theoretically, land के ऊपर tax नहीं भरना है, लेकिन practically sir बहुत ही difficult होता है, because the way in which the law is made and the scheme is prescribed, it is very difficult, sir. So my answer is theoretically yes, practically difficult, unless until Sunil Bhai tells me that my client can, bifurcate under the RERA or under the MOFA. If I can bifurcate, because Manish Munjal Bhai was a typical case in the Ahmedabad, where the the land was shown separately, because land was conveyed to the buyer, and the construction of bungalow was done. So both were separate transactions. But in Mumbai, I think Mumbai and Maharashtra, it will be very difficult, sir. Sunil ji, can you give me 1 minute on that and please explain me?
You're absolutely right. RERA does not envisage the situation of a separation of land rights and the construction rights. It is all inclusive into one, a package, a bundle of things. So the flat transaction does not differentiate between the land value and the services value. So in Mumbai and Maharashtra, it is a consolidated taxation to be levied on you.
Thank you, sir. Thank you, sir.
Sir, sorry to ask a connected question. As I understand, in Maharashtra, obviously the RERA does not permit it, but instead of replacing the actual value in terms of the transaction, Why not replace? Because stamp duty value is available in the Maharashtra also and everywhere, and stamp duty value is adopted for the purpose of income tax also for making payment of the tax. So if land value stamp duty is available, and if it exceeds much more than 1/3, then I think that option can also be explored by the developers, and it may be taken to the court to say that, I mean, it is unfair to levy such a heavy tax on the land itself indirectly.
I agree with you, sir. I agree with you, sir, but it's a matter we will travel up to the Supreme Court.
Yeah, correct.
And no developer want to take a risk now because it's a
Yes.
very high-stake matter. Because if
Right.
I'm selling 100 flats in that apartment, as a developer, my risk become very big. So in the indirect tax, sir, approach is very clear. If I can collect it from the customer, please play kho with him. You give the code to him. Let him run. I will not run. This is what the generally the
Right.
industry trends are.
Right.
Yeah. Okay, sir. Thank you, sir.
Even you are very right. I mean, even with respect to ITC on the constructed property which is let out, which is a matter pending before the Honorable Supreme Court. I mean, I'm involved in that matter. I mean, the hearing is on 17th. So most of the developers are unwilling to join the issue because they don't want to come in the limelight. There are some very biggest developers who have joined the issue with me, but they say that you already have a petition, so we join in the shadow, not in the forefront. So that is the problem. Now my last question is to Sunil sir, with respect to how to interpret the information made available under RERA and how to utilize it to take a informed decision.
Yeah. See, you have touched upon the most important aspect of RERA, because RERA starts with this clarification for the benefit of everybody that the information should be available to all the stakeholders in the right manner. Just give an example, a concept of built-up area. We had a concept of a sellable area or a built-up area, which is not defined in any of the acts. It was a notional creation of the minds of the developers, and with that, the transaction were happening. So you are buying a flat of 1,000 square feet built-up area, getting a flat of 600 square feet carpet area. So now this anomaly has been removed by RERA by putting the concept of carpet area. So basically, RERA is the law which is being implemented to get clarification and clarity to all the stakeholders. So now when you're buying a property, you have got every right to ask the developer about the exact RERA carpet area. The architect who is giving form number 1 is required to issue a certificate giving the exact carpet area. So which means that the information which is being made available to the allottee is absolutely crystal clear, and all the information is uploaded by the developer with his digital signature. So the developer cannot chicken out saying that this is not the correct thing, I never gave it. So it is information which is given by the developer, one. Secondly, the RERA portal is so advanced that everything is available to you on a platter, the click of a button. You can see the developer, the promoters. Just give an example, you find that the developer name is Raheja, or whether it is K Raheja, R Raheja, M Raheja, P Raheja, you don't know. So we presume that it is Raheja, a very reputed builder, but unless you see the website, unless you see the project registration details, you can't make out whether it is the Raheja family who is doing it or somebody else using the name of the family. So here the website portal gives you all this data, who the promoter is, who the partners are, what are the contact numbers, what is the amenity, what is the plot area, is there any encumbrance, is there any liability, all that is available to you on the website of RERA. So you have to just take the effort of punching the project registration number or the name, and all the information available to you. Plus, the RERA says that the developer should give all the information to the allottee at the time of booking. So the presumption that you know everything, you have seen the title which was mentioned in the agreement, does not work. The developer is required to give a no encumbrance certificate or an encumbrance certificate on the portal of RERA when he registers the project. The advocate is required to give a clear title report in the format as given by RERA for the benefit of the allottee. So now the allottee is in a position to take an informed decision. All the aspects on which he has queries, he has got questions are addressed by the RERA portal. You can easily approach a chartered accountant who understands RERA and sit with him for 15 minutes to get all the relevant information. The information as regards the completion of the project, the date of completion, the profession involved, the agents involved, all that information is made available to you on the portal. Only that Form 3 data is slightly, part of data is not revealed to you, but other than that, everything is available to you. Plus, when you file a complaint with RERA, you can have more access to the information which is relevant to your subject. For example, now if you see a portal, when you see there is a booking of 90% of the project completed, and the project right now completion stage is only 40%, which means that the developer has taken money from 90% of the allottees, but has spent only to the extra 40% of the construction project, which means that the siphoning of funds have already happened there. The fact that 90% people have booked the flats, the booking is strong, and still the project progress is not that good. So these are the parameters which can be rechecked by you while taking a decision about the project. Secondly, about the approvals which have been taken by the developer, he is required to upload all the information on the RERA website. So if you are buying a flat on the 9th floor, you have got every right to check whether the CC has been issued up to 9th floor or not. If the CC is not issued, then the project has not come to life for the 9th floor. Then it is not correct on your part to go for the booking of the 9th floor flat. The developer is not supposed to do the booking, but he may give you some sort of a promise that, okay, this is coming within 15 days time, go ahead with the booking. These are the pitfalls that are created by the developers. It is your job to look into all the approvals and make sure that you take an informed decision. Similarly, when the booking is done, the developer is supposed to give a transparent information to the allottee. And the law says, in case it is found tomorrow that the information given to the allottee at the time of accepting of the booking was wrong or erratic, in that case, the allottee has got every right to cancel the booking and get the money back from the developer. And the law requires the developer to give the money back to the allottee without asking any questions. In case the developer is not doing it, you have got every right to file a complaint under the law, under RERA, to the authority, and such complaints are disposed of very fast by the authority because it's an apparent case of misconduct by the developer. So RERA gives us, all of us, a chance to take an informed decision. And that is again one more area of practice for all the chartered accountants, because you can advise your clients when they are going for purchase of a property that you can give them a proper decision, a well-informed, well-thought-about decision whether the property is fit for buying, because you can understand from the website what are the intricacies of the project, and then that can be done absolutely in a professional manner, which we are doing it. We render the services to the clients wherein they go in for a property after taking our advice and try to reduce the risk to the extent possible so that they have a better success rate. Thank you.
Thank you very much, sir. I've been requested by Pinky ji to extend the session by another 10 minutes. So I take this opportunity of extended time to ask a few queries from the participants. My first question is to Sunil sir only. It's a very interesting question. I mean, the question is whether RERA registration is required for a permanent transit camp units developed under Section 3311 of DCPR. I mean, are you able to decipher the question?
Yeah. It's very simple. See, the RERA comes into play when the relationship of a promoter and an allottee. What you are referring to is a temporary or a transit accommodation to be given to the rehab portion entitled a tenant for a limited period of time. So here you are not transferring the rights of that property to the rehab portion to the tenant. It is a temporary arrangement. RERA comes into play when you are an allottee and the person who is giving to you is the promoter. So the two definitions have to be satisfied. Then and only then the contract can come under the purview of RERA. Rehab portion, when the transit accommodation is there, does not come under the purview of RERA. So this question will not be applicable and he will not be getting the protection under RERA.
Okay,
And
thank you,
what
sir.
about the GST? And what about the GST part on that? Sir?
No, in
Naresh
that
sir?
case, no, yeah, go ahead. Sorry, Naresh Sheth, go ahead.
So GST basic principle समझ लेना चाहिए हमको. Whenever GST is a tax on the supply of goods or services for a consideration. When I am giving the temporary accommodation, transit accommodation, I am not getting any consideration whatsoever from that, the people whom I am transferring to the transfer, this transit camp. So in my view, there is no GST implication at all because this is not a transaction which I have transacted for a consideration. So I am very clear that you are constructing the legal position is you are constructing the transit accommodation for yourself only. And you are just allowing the other people to stay there for your own project. So even we have that exemption called residential renting, residential house rented for the residential purpose. Even if suppose somebody takes that view, कि भाई आप सबको रखते हो उधर transit camp में, so is it taxable? So number one, I am not getting any consideration for renting. And even if it is renting, if somebody takes that, sort of consideration kind, कि वो लोग ने घर छोड़ा इसके लिए हम ये बना सकते हैं वगैरह वगैरह, so then also I can take the position it's a residential renting which is exempted under the act. Yeah.
Thank you, sir. My next question is to CA Vimal sir. It's a very interesting question. The question is transfer of undivided share of land to the developer attracts section 247 Roman 5 read with section 53 of the Transfer of Property Act, whether it triggers the transfer definition of the capital gain tax.
The undivided right means I have, say, for example, there can be number of propositions. One can be I have 100 acre, I'm selling only 10 acre to the builder. I'm parting with a possession as per Transfer of Property Act, either under 53A or under 54. Actually, I'm liable to pay the tax. Their second part can be there are 5 co-owners of the property. We say, for example, my father is the owner, my 4 brothers are the owner, and each person have 20% right. So I sell my, and they do bifurcation. What is my portion? What is my father's portion? What is my brother's portion? So I sell undivided right, title, interest in the whole property, and I part with my part of the possession. Physical possession I cannot give, but I make a conveyance in favor of the party. So indirectly conveyance means he got my right go transfer to him. He comes under my shoes, and then whatever consideration I get, or I may get in installment. But once I part with the conveyance, I'm liable to pay the tax. If I'm not parted with the conveyance, I simply made the agreement with him. When my father and brother all agree, that time I will transfer, and today I'm committing with you, so I cannot sell to somebody else. And I received maybe part consideration or full consideration, but I am not parted with the possession, then I'm not liable to pay the tax.
Thank you, sir. Thank you very much. My last question is to Naresh sir. Sir, it's a very interesting question. The question is whether a real estate project with 40% commercial area, 60% residential area being developed on a land which is 50% self-owned and 50% taken on development agreement, and both the lands are amalgamated. Now the question is, landowner is giving right with respect to residential flat, that is he will be given in exchange the residential flat. So what would be the GST liability on RCM basis for development agreement?
Let me tell you, sir, I'm feeling that I'm answering the question number 1 of our accounting paper, CA paper, sir. This is one of this kind of a paper. So, but I will try to attempt it. Basically, as I have explained to the audience, that tax is on the unsold. Tax is a development right attributable to unsold area, correct? That is what the unsold residential flats.
Correct.
And I am presuming, I did not get the question. Means entire
I mean, he is saying that the there is a plot
40% will commercial will be there, correct, sir?
40% commercial, 60% residential. Now 50% is self-owned land.
Yes, sir.
50% is development right. But the developer, landowner is giving development right. He will get the residential flats in return. So probably, I think from the query, it appears that the landowner is giving his development right for the residential plot. So I think it said it has to be tested according to and in accordance with the development rights applicable to the residential property.
Sir, I will personally feel that once the plot is amalgamated, the entire FSI comes from an amalgamated plot, sir. You know, the development right, development potential come from the amalgamated plot. I will not bifurcate now. I will treat entire plot as a one plot, sir. That is the first thing, I will proceed. As far as 50% of that land was owned by the landowner, correct, sir? And he is giving the development potential in respect of his 50% of the land, sir. And baki ka jo maybe the other plot, he is giving only the development rights, sir.
Right.
In short, in summary, he is giving the development, landowner is giving the development right for both the plots together, sir, because he is not conveying the land. His 50% of land is not conveyed to the developer. What I understand from the query, so, if I take that entire land after amalgamation, the landowner is given the development right only to the, this gentleman, the developer. Then what I will do, sir, I will take out the 40% of the development right, correct, sir? 40% of the total amalgamated area is used for the commercial purposes. Suppose the total amalgamated plot ka FSI is say 1 lakh square feet. Then 40% thereof is 40,000 is for the commercial premises. And from the residential plot, suppose, residential plot, residential apartment, if 60% items are sold, sir, 20% are given to the landowner. So balance 20% is unsold residential property. So the 20% out of 1 lakh, 20,000, 20%, I say it is attributable to the unsold flats. So totally on that 60% of the development right, I have to pay the GST, sir. Now again the googly comes here. As far as 40% is concerned, I don't have the option of 5% of the market value of the flat, etc. Whatever is the value, whatever the value is there, I have to calculate 40% there as a value of a development right, and on that 18% tax I have to pay, sir. As far as the 20% is concerned, I will work out the same, applying the 18%, but at the same time, I will take out what is the market value of the 20% unsold flat near the date of, market value means, sir, agreement entered into by the developer post means near to the OC date. That will be the market value. I will multiply that with the area, 20% area of the flat, and whatever value comes, I will work out 5% thereon, sir. And whichever is less, I think this is the what I will take that approach. And sir, this question I would have loved to answer if I would given the blackboard and the Excel sheet. So I would have
I understand, sir. It's a very complex question.
But conceptually, this is the way you have to work out, sir.
Yes, thank you very much, sir. I mean, I'm really thankful to all of you for a very succinct, but at the same time, very comprehensive analysis of all the queries raised to you. And I hand over the proceedings to CA Pinky Kedia for further formal closure of the session.
Thank you. Thank you. We had very good and very insightful session by moderator Vinay ji and Vimal ji, Naresh ji and Sunil ji. All are given very good insight on all the questions being asked to them. And they have answered all the many questions of participants also in elaborated manner. मैं रेरा में प्रैक्टिस नहीं करती, लेकिन फिर भी मुझे बहुत कुछ ज्ञान मिल गया है मेरे क्लाइंट्स को भी बताने के लिए थोड़ा बहुत. So अभी देखिए पार्टिसिपेंट्स भी, आपको यदि देखा होगा किसी ने, तो पार्टिसिपेंट्स भी 250 तक पहुंच गए थे बीच में. And after 1 PM also there is 200 participants there. So उन लोगों को भी है कि लास्ट मोमेंट तक भी कुछ और भी सीखने मिल जाए. So this is your presence and your sharing of knowledge. So now I request CA Rasmi Lonkar, who is also practicing in RERA only, and she is also a good speaker on this subject, to give a heartily and formal vote of thanks to all the deserved panelists and moderator of the session. Rasmi, please carry on.
Thank you, Pinky ji. On behalf of ICAI, I, CA Rashmi Lonikar, offer a formal vote of thanks to all the esteemed speakers and panelists. I mean, it was like chart jaise hote na waise ho gaya. It was so good that you had all the ingredients of a good chart. We had the income tax, we had the RERA, as well as the GST that is coming into play. I would offer my formal vote of thanks to even Gautam Chatterjee sir for staying with us for so long, and he's a walking encyclopedia on RERA, and like I thank him for the 3 T's that he has given about transparency, timely completion, and trust. And we have discussed in detail about occupation and possession. That's very important thing that Vimal ji has talked about. Then we have also talked about taxability of development rights and the GST. And we have talked about responsibility of landowner and reverse charge about it. Then lease of land. It is such a contentious issue right now. So thank you, Naresh sir, for bringing it in forefront. And Sunil Naik sir talking about saleable area, built up area, and carpet area. Those terms we had not even heard about it before 2017 as CA. We have really studied, and I thank him for that. And I would also like to offer the formal vote of thanks to CA Shri Vimal Punmiya ji, CA Sunil Naik sir ji, CA Naresh Sheth ji, and CA Advocate Vinay Shraff sir. Sir, you have coordinated it so well. And I thank CA Pinky Kedia ji for organizing such a beautiful session. And 200 plus participants is indication that we can have a full day session on this. I mean, it is and Naresh sir, next time surely we will be bringing in the blackboard on Zoom also. So
and thoda zyada time de do yaar.
Yes sir, it is
Yes,
definitely
sir.
our loss, sir, that we were not able to.
It's like that. We had a Ferrari car, but you told us to drive in the terrace of our building. That was the issue.
सर ये जैसे हम लोगों का ये भी ट्रेलर था सर.
ठीक है.
पिक्चर अभी बाकी है.
We love it for that.
Over to you.
Because let me tell you, Pinky, I have seen all the panelists so passionate about their subject.
Yes.
So passionate, So I think we deserve, more detailed session. Thank
Yes,
you.
sir, definitely, sir. Next time we will do for more time and we will try to do it physically also, if it is possible. So, but I want to thanks from my heart कि आपने इतने आप लोग पैशनेट होके आंसर दे रहे थे कि आपको बीच में बोलना, मतलब बीच में हम लोगों को बोलना पड़ा था कि आप लोग इलेबोरेट कम करिए. मतलब ये था. तो आप देख रहे हो, यदि आप लोग सब देखो चैट बॉक्स में पूरा थैंक यू और आपके उसके लिए भरा हुआ है कि वो लोग all have very much like this session and they want more session on this. So next time we will plan for more period, and if possible we will try in physical also. So from WRC of ICI, I want to thank all the panelists and moderator Vinay ji. You have done very excellent job of moderating the session. So thank you Sachin ji, Vivek ji, and Rasmi ji to coordinate and to assist me in conducting successful session of RERA. Thank you all. Now we can close the
Thank you
session.
so much.
Yeah.
Thank you very much.
Thanks to participant for present hearing. Thank you.
Thank you very much.
Bye bye. Take care.
Thank you. Bye bye.